Today is a big day for Bitcoin and crypto, and I am going to explain exactly why. But later on during this day, you are going to see big volatility. So make sure to watch this video right now in order to be prepared for that. Also, I'm going to go through the longer term things that has happened since yesterday, which is actually going to have a big effect on the crypto markets moving forward. We do have a lot of very important and interesting charts I want to go over, so make sure to watch this video from the beginning until the end. Welcome back everybody, my name is Chris, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you are new to the channel, then make sure to subscribe and activate the bell right now. So let's get straight into it, and what you can see guys is that the orange box proves once again to be very strong resistance. So the first time we went into this one, you can see that we did have a decent pullback. The second time around, we actually closed a candle right on the edge here, but once again, the price went just to the edge of the orange box at $58,000, and then once again we started to go down. So we've actually had a pullback right here, and I will talk more about a catalyst, a reason for why you saw it happen exactly right here. Well, apart from the orange box, obviously we know that this was a very important resistance level, but there was something else going on here which I am going to talk about in a bit. First, just some regular stuff. This trend line is still currently at 58,740. You do have the moving averages right above that, starting about 59,600, 61,700, $64,000. So these are some of the key levels of resistance that we need to watch right now. Also, the trend of making lower lows and lower highs is still intact as well. So make sure to watch many of these catalysts. In the last few videos, I've talked about exactly what I want to see in order to establish a reversal on the shorter time frames, a reversal, and start to go into a more bullish trend. And so make sure to watch those videos if you're interested in that. But for now, this is just a waiting game. In fact, I am going to make a video because a lot of people are asking me like, okay, if we are not going to break through these levels and establish a bullish trend, if we are going to see a new low in the market, so this was the current low at 49,200, if we will see a new low in the market, how low can Bitcoin realistically go? And how big is the probabilities that we are going to go there? So I am actually going to post a video talking about exactly that. So make sure to subscribe and activate the bell if you want to see that. So, and in that I'm also going to go over my entire plan in more details. Traditional markets, you can see traditional markets are still just hovering around here, these two orange lines. And after seeing this pullback, a little bit of a bounce, a little bit of a pullback, a little bit of a bounce. So mostly going sideways right here. But I do think that traditional markets are also looking pretty well. Now, there was a debate yesterday. And the debate, unfortunately, who won it? According to the polls, it was actually Kamala Harris. So she won the debate, and this meant that Donald Trump's odds of winning the election unfortunately went down to 50%. So this is unfortunate. And by the way, during this debate, there was no mention of crypto at all. But yes, of course, we want Donald Trump to win this election. And if he fulfills all of the promises for crypto that he has said that he is going to establish, then that is very bullish. That is why the market is reacting very strongly to when Donald Trump's odds is going down. And this was actually coming back here. This was during the debate. So during the debate, Bitcoin went down as the odds of Donald Trump winning the election went down during that debate. So this is a key thing that we need to keep our eyes on. 55 days left for this. And if you look at the data that's being released today, you have the core inflation rate and you have the inflation rate. Now, one interesting thing here is that, one, you are going to see big volatility today based on this. We already know that. But also, if you look at the forecast is 2.7% inflation year over year, which is actually not too far from the 2% target that the Fed has. So if we are going to come in lower than this, like 2.5 or maybe even 2.4, which would be insane, that is going to give the Fed more leg room to cut interest rates harder, which is going to have a big positive impact on the markets, of course. So this is a narrative we need to keep watching if that actually happens. So that means that the inflation data that is being released today is more important than potentially it has ever been, because this is going to be the key factor that determines, one of the key factors that determines if the Fed are going to make one rate cut of 0.25% or two rate cuts, meaning that they cut it by 0.5%. So we're watching this data. Be prepared for volatility, guys. And yeah, make sure to not use too much leverage, as you can see a big amount of volatility based on this. And another reason why I think that we can see a lot of volatility based on this is that the estimated leverage ratio across all crypto exchanges has hit its highest level in 2024, indicating that Bitcoin traders are taking high risk. So a lot of people are using leverage right now. Why are they using leverage? Because they're bored of the market, they're bored of the sideways action, and they want to take more risk. Now, this causes more volatility. So we need to be careful with leverage at this stage. You do not want to get liquidated, so make sure that you handle your positions very well. But everything is still looking fine, in my opinion. There's an increase in USDT stablecoin holdings on exchanges. And in fact, if you look at just yesterday, you had $300 million worth of stablecoins flowing into exchanges. So what does this mean? It means that there's a lot of money sidelined on exchanges, typically meaning that they're looking to get into a position. They're looking for a dip, and they're looking to accumulate a position over time as well. So all of this is looking good for Bitcoin. I am not too worried. Now, I wanted to show you this one as well. This is actually on the 3-month chart. And what you can see is, if you look at throughout Bitcoin's history, we do have a bit of a fractal playing out. So you do have the previous top, you do have the bear market, you do have a break of the previous all-time high, and you go into the parabolic phase of the bull market. So are we going to see the same thing here? You can see it looks very, very similar. Another thing I want to point out is, if you look at the bottom of Bitcoin, you have actually 10 candles to the top. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles to the top from the very bottom. Now, if you look at the very bottom right here, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you have potentially 2 more candles until we start to top out for this cycle. So that is just counting the candles here and looking at this fractal. Now this is on, like I said, the 3-month chart. So 2 candles would mean 6 months. So this could mean that the next 6 months is going to be very bullish. And this is what the chart is telling us as well. So let's keep our eyes on this. This is all following the liquidity cycle. And we know that the Fed are going to ramp up the liquidity in the world right now. And they do that by cutting interest rates. This is why you do not want to bet against the Fed. The Fed started to cut interest rates, and all assets have always gone up throughout time when they cut interest rates. When they raise interest rates, it is the inverse. Always assets have gone down when they increase interest rates. So do not bet against the Fed. This is something that is very important. And the Fed really will want to cut interest rates. Why? They will want to boost liquidity, because if you look at this chart, the amount of bankruptcies in the United States is at its highest point since COVID. We're actually at similar levels of bankruptcies for US companies as you saw during the COVID period. And if you take away the COVID period, we haven't had this amount of bankruptcies since 2010, in fact. So the Fed will want to boost the economy. They will want to stop this trend of bankruptcies and the economy getting weaker. And so this is, again, like I said, why the inflation data being released today is extremely important. So apart from that, I'm still holding my positions. I'm still looking to buy any dips that comes along. And I hope that you enjoyed today's video, guys. I will see you in the next one.